So we're going to be doing a slightly different version of the Sunday market breakdown this week. Obviously, as Mark is still recovering, us coaches will be stepping in and breaking down the Sunday market breakdown for you all. We're going to be breaking it into different sections and covering a section each. And then at the end, we're going to be doing a roundtable style discussion, answering all the questions that you guys have submitted. We had some fantastic questions sent through, and we think that the way we're going to answer them today is going to be a little bit different, provide you with something a little bit new, where you get a few different opinions around the same subject. So we hope you take a lot of value away from that. So Mark, we're wishing you a very speedy recovery. I'm sure you'll be back to full health very shortly. But before any longer, let's just dive straight into the DXY and the top six. So starting on the weekly chart with the DXY, what we can see here is that after having a couple of weeks of very impulsive price action, recently for the past few weeks, price has slowed down quite considerably and is now creating a little bit more of a sideways movement here. If I pop down to the daily chart, we can see this a little bit more. And this is very, very natural. After having an impulsive leg in the market, it's very normal for price to slow down somewhat, become a little bit more corrective. The market is cyclical. It comes in waves. And after an impulsive wave, it is very, very normal to have a slightly more corrective, slightly slower wave as the market creates new price action and gives us new structure to work with. So this is perfectly normal and perfectly expected. So what you can see here on the daily chart is that after pushing down relatively aggressively, we have started to create this sideways continuation pattern here. If I go down to the 4 hour, what we can see is that we have this very, very nice 1, 2, 3 style pattern forming here. If I put a ray line in here, what you can see is that we have this one touch, 2 touch, 3 touches here, and I am expecting the DXY and the dollar to push to the downside over the coming weeks. So if I just draw in a little bit more structure like so, you can see that we are within this ascending channel, pushing up towards this ray line, 3rd touch here. Now, there is a possibility of us breaking to the downside from here immediately, or we can trickle up a little bit higher. So if I just go down to the 1 hour, and we'll just draw this in a little bit more neatly. So if I just zoom in for you guys. So with the DXY, what we can expect here is either a little hover along this lower trend line here after market open and a push to the downside, or we may see price push a little bit higher to the upside, potentially break this ray line and then retrace back in and either impulse down from here, or we may get an impulse back in, a slight correction like so, and then push to the downside here. There is also a third alternative option here, which is for price to push back to the upside, create continuation like so, and then continue to push higher. However, I do see this as being the least likely of the situations to occur next week, as across the board it is looking like the dollar wants to push to the downside. So the DXY coming to the downside, we have a lot of room to the downside on this pair. So we have plenty of opportunities, plenty of time to get into these positions. So there is no need to rush and dive into something unnecessarily early on market open. So if I just clean this up a little bit here, and I move over to the top 6. So starting with euro dollar, and what I'm going to do is compare them side by side. So now moving on to the top 6. Okay, now into the top 6, starting with euro dollar on the weekly chart. Obviously, this is the inverse of the DXY. And what I'll be doing in a moment is comparing them side by side so that we can see the similar price action and what we're expecting to see over the coming weeks. So with euro dollar on the weekly chart here, very, very much like the DXY, what we have seen is a couple of weeks of very impulsive price action. But now over the past week or two, we have slowed down quite considerably. Price is forming this very, very corrective sort of price action here, trickling down towards this ray line bottom here. If I go down to the 4 hour as well, we'll be able to draw this in a little bit more concisely, and we can then compare this side by side with the DXY. Okay, so what I'm seeing right here is this slow corrective move down to the downside here, down towards this ray line double bottom here. Now, I would not be looking to jump in with a risk entry around this sort of area here. I would be waiting for the market to either trickle lower down towards this area here over the coming days this week. So down to this sort of area around here, seeing what sort of price action we form around this ray line bottom here, and then pushing to the upside, looking to capitalize on this with the first flag taking this to the upside, or for price to impulsively break out of this descending channel, create continuation, and then I'm looking to capitalize on this to the upside here. Now, if I just get rid of this and then compare this side by side with the DXY, there's a few interesting comparisons here. So if we go to pull the DXY up on the left, and we have euro dollar on the right. Now, what you can see here, obviously these are the inverse. We're on the 4-hour chart here. What I really like are the similarities here. What I'm going to do is invert my euro dollar chart. Okay, so you can see here that when we have euro dollar on, if I take this out to the 4-hour chart as well, so we have euro dollar on the 4-hour chart, the DXY on the 4-hour chart, side by side. Can you see the similarities here between this price action? Obviously, euro dollar is inverted right now. We are looking to take it to the upside, but when you compare it to the DXY, you can see how closely correlated these are. And as we're looking for the DXY to push to the downside, if I just draw this in, we are looking for the DXY to push to the downside here. We would be looking for euro dollar to be doing something very similar, which would be to break down to here. Now, obviously, as this is inverted, if I just invert that back the other way, that would mean that we're looking for euro dollar to push to the upside. Very similarly with the DXY, this may trickle a little bit higher first before then breaking and turning around to the downside. So we are looking for this to potentially come a little bit higher, back up to this sort of rail line area before turning to the downside. And that could be a very similar case with euro dollar, looking for this to trickle a little bit lower to the downside here. We'd have this 1, 2, 3 touches around this area here. There is the potential to break even lower and come to this rail line low down here. But I wouldn't be rushing into this. I'll be waiting for the market to give me a clear signal and then be looking to capitalize on this. So just to summarize with this, we are looking for euro dollar to the upside. There is no rush to jump into this position because we have a lot of upside opportunity on this pair. I would be targeting this high of the correction as my first inflection point, and then this high here as the next inflection point. So if we were able to capitalize on an entry around, let's say around this sort of area at the bottom here, with either a risk entry, or we can wait for the first flag, to this point here with we wouldn't be getting in with an 80 pip stop loss. If we just bring this in, something more about, let's say 40 pips, say 40 pips as a stop loss around this area, we have to go with what's relevant. Then this would be around 10% just to the top of this correction here, and then up to this high over here on the left hand side, this is almost 19%. It's very unlikely that we'd get that all in one move, but it's just interesting to be able to see the amount of percentage available to us on these pairs. We don't need to dive in unnecessarily early. Okay, so that is my comparison of the DXY to euro dollar. I hope you've taken something away from that, but I wouldn't be rushing this. I would just be waiting for the first push to the upside, correction, and then looking to enter there. So moving on to the next pair. So the next pair on watch is Euro Aussie. Now this has been pushing pretty aggressively to the downside over the past couple of weeks. We haven't really been given a real strong signal from the market where we're able to get involved in this pair. Price has moved a long way, but it hasn't really given us a great entry opportunity. But recently, over the past week or so, we did start to form this sideways continuation, and price has played out beautifully to the downside. If I just drop into the 4-hour chart here, what we can see is that we were discussing the other week about this potential falcon flag forming here. So we pushed to the downside. We had the beginnings of this falcon flag where we had our upper trend line around this sort of area here. And we were looking at this to form the first part of the falcon flag, push down, push up, and waiting to see what happened next. However, price never really came back up for that third touch. And then we evolved our structure so slightly to encompass the most recent 2 touches. So what we had on the 4 hours, we had our upper trend line like so. We had our lower trend line in here. So we have 1, 2, and then we broke through after the third touch here. If I just drop down to the 1 hour, just so we can see a little bit more clearly what we're looking at right now, is that we have 2 clear touches at the top, 1, 2, 3 clear touches at the bottom. You can almost say this is 4 touches, also with this little arcing scoop like here between. So we have 1, 2, 3, and then on the 4th touch here, we just impulsively broke through to the downside and started to create new continuation pattern underneath here. Now this is there is a lot of comparisons between Euro Aussie and Euro Kiwi right now. We do know that the 2 pairs are closely correlated. They do move quite similarly. I prefer Euro Aussie over Euro Kiwi. I will be covering Euro Kiwi next, and I'm going to go into some detail about telling you why I prefer Euro Aussie to Euro Kiwi. So the fact that we have broken impulsively below this lower trend line is a great sign for me that we are just looking for further continuation and then to carry on taking this to the downside. If I just go back out to the 4-hour chart, what you can see here is that we have come a long way in this move. We have moved a long way to the downside, but we still have a very long way to go to the downside here. So there is no need to rush. We'll have an abundance of opportunities to get involved in this pair to the downside. So it's just about being a little bit patient, sticking to your plan and finding an entry that suits you. Now, I do know that some people managed to enter this trade on Friday afternoon, a few hours before market close, on the retrace candle up here. So if we dive down into the 15-minute chart, what we can see here is that we have this very nice upper structure. So we have this 1, 2, 3 touches here, and we were able to draw in a bit of a phase line connecting these lows here and looking for this on the break of this phase line here. So if I just size this up a little bit, I know that some people got involved here on the break of the phase line. It was around about 50 pips to stop loss here. So if we just size this up, so 50 pips would have been okay, putting your stop just above the high here, and then to the bottom of this flag here is just over 1%. Now, if you did take this trade, it is perfectly valid. There is nothing wrong with this. It just comes down to your own sort of preference. As this occurred around 4:35 p.m. on Friday afternoon, it depends on what your cutoff point is for the market. For me, I tend not to take anything after about 4 or 5 p.m. on a Friday. 6 p.m. is my absolute latest that I would take a position. I know that other people have 7 p.m., 8 p.m., even 9 p.m. However, it's all about individual preference, and I think this is something that you have to trial out for yourself, trial and error, to see what works for you and what doesn't work. We do typically see some very small gaps on over the weekend on Sunday market open. So, for me, I was very happy to just sit out of this trade and just see what happens after we get the market open on Sunday evening, and just see what the lay of the land is around then to see what I can capitalize on with this pair. Now, what you may be able to see as well down here on the 15 is that we have this lower trend line being able to draw in here. So we could be looking at this potentially as a move down out of this, and this is a first little hover here and able to enter this position, let's say with a 35 pip stop loss would be more than sufficient with this pair here. And then that would give you, with a reduced risk entry, being able to just take this down to here about 1.3 to the low of this flag. Now, this is a valid entry if I just zoom in a little bit more. However, this is definitely not a high probability entry, as we stand a very, very good chance on Sunday evening, Monday morning, just trickling here, and then just coming back up to the upside here, scooping around to form a third or fourth touch at the top here. So we have this 1, 2, 3, potentially a fourth touch up at the top here, giving us a nice little scoop arc sort of formation around here before dropping to the downside. Alternatively, if you can get tagged in here and price can just create a much, much deeper sideways continuation. But we don't know what the market's going to give us right now. So it's best, in my opinion, to just kind of sit on the sidelines for a little bit longer, not dive into the market too quickly on market open on Sunday evening, and just let the dust settle and then see what we want to be able to do here. What I am looking for is a risk entry from the top of this structure here. So pushing back up to the highs to then be able to take this with a risk entry, either with a risk entry or waiting for price to move up correctively to the edge here, move to the downside, and then enter on that first 15-minute flag like so. These are the two different ways that I will be looking to capitalize on this pair here. So we have one option here, be able to get in with a much smaller stop loss, 30, 25 pips would be fine. Alternatively, we have the first flag here, the first little correction that you would be able to drill down to the 15 minutes to find here. And you can easily then get your stop loss above this high. So I've always talked about this in my videos, using structure as a shield, getting as much structure between my entry point and my stop loss as I can. It's better to take slightly less profit but manage to stay in the trade. Don't try to run before you can walk, guys. It's especially for the newer traders out there, it's a great experience to be involved in these trades, see them run and get to practice your managing your emotions, and also managing trailing your stop in these live positions as well. So we do know that alternatively, we don't have to push to the upside. We can be pushing to the downside on this pair. I would be marking in this ray line low here. This is not a significant part of structure here, but I would just have this on as a little inflection point. If price was to correctively push down to the downside here, I wouldn't be looking to enter this position here with a reduced risk entry on the lows of this structure here, as you stand a very good chance of getting tagged in and tagged out, which is something that I'll cover on Euro Kiwi in a second. However, what I would be looking for then is an impulsive break below this structure here, and then just a small hover, visible on the 1 hour preferably, but I would be okay if this was just visible on the 15 as well, as this is the first break below the structure here, so it's likely to not be the biggest, most complete structure that we've got here. We have had this very large continuation pattern here, dropping into another pattern which is pretty well formed, so it's unlikely that the following pattern that we're going to see on the break to the downside here is going to be pulling back, creating imperfect highs in the structure. So I'll be looking to enter this with either a reduced risk entry or a risk entry, whatever the market gives me, and then looking to capitalize on this further to the downside. So that is Euro Aussie, guys. Moving on to the next pair. Okay, so the next pair in the top 6 is Euro Kiwi. So very similar to what we've just been discussing with Euro Aussie. We have had this very aggressive push to the upside, a large high test candle visible on the daily, and then we have retraced back into the pattern here, and we've started to form sideways continuation. Now, when I compare Euro Aussie and Euro Kiwi is not as far into the run. However, the price action that we have just formed on Euro Aussie is looking more favorable in my eyes for the coming week. But I'm going to break these down a little bit more. So dropping down into the 4 hour, what we can see here is that we've had this beautiful 1 2 3 touch pattern here, and well done to everyone that capitalized on this pair, on this trade to the downside after this third touch, because there was a beautiful trade here. So even on the 4 hour, we can see this clear as day. We have this 1 2 3 touches at the top of structure here. Even on the 4 hour, you can see we've got this beautiful complete bearish engulfing candle here, and there were multiple ways to enter this trade. If I go down to the 1 hour chart, what you can see here is that you would have been able to enter this on the break of this phase line here. On the 15-minute, you can see we have on the 1 hour, you can see we have this beautiful evening star formation, and on the 15-minute, you can see a slight hover here. So there were multiple ways to enter this trade, and you would have been able to capitalize on this move to the downside, which happened very quickly. And trailing your stop down, you would have probably locked in about 4 or 5%, depending on how aggressive you were with your management, trailing it around this sort of area. So well done to everyone that took that trade last week. You may even still be in the position as well, looking for this to roll to the downside. I am expecting further downside on Euro Kiwi. However, Euro Aussie, like I said just before, is looking more likely to be ready to push to the downside before Euro Kiwi, because the difference here is that Euro Aussie has already broken these lows. You can see here we have this clear 1 2 3 touches at the bottom of structure here, but price action right now is currently still inside here. Now, I have had a few DMs as well in Slack and on Instagram with people asking about how they've reined in their lower trend line here to then create separate structure for this piece of price action here, because I know a few people did also take a loss on this trade by jumping in perhaps a little bit too early. So what I want to do is I just want to break down with a little mini lesson here when I would evolve structure and rein in my lower trend line, or when I would then leave it as it is. So right now I'm leaving this structure, this lower trend line, in as it is, and I am not reining this in and creating separate structure. And the reason is as follows. So if I just draw price action like so, and bear with me whilst I draw this up for you guys. So what I like to see is when price action moves up, moves down, moves up. This is very typical price action, like what we're seeing on Euro Kiwi right now. When price action drops to the downside and creates a continuation pattern above the lower trend line, I do not rein in my trend line like so, and then create separate structure. The reason being is that I still see this correction here being inside this pattern here. And what I have found through experience over the years is that when you enter reduced risk entries here on the break of these positions to the downside, you stand a very good chance of just getting tagged in and then tagged out as price then comes back up to form another touch at the top here, or just creating a deeper correction in this area here. Because you have nothing to protect your stop loss as well, it's very easy to then for price to just trickle a little bit higher, tag you into the trade, tag you out, and then you've taken a very quick 1% loss. Now, on the flip side, when I do rein in my lower trend line is when price action is cutting through the trend line. So if I just draw these in again, so we have our price action moving up, down, and then we form a correction like so price action is cutting straight through the middle of this. This is when I would rein in my trend line, because the trend line doesn't make sense to be going through here. If we rein it in here, we can then see that this is now forming its own structure. This is separate to this part here. So it's a slight difference, but it makes a big difference in the way that you're able to view the markets. It is now when I see this, I'm able to view this as its own piece of price action. And I would be happy to take this with either a reduced risk entry like so, taking this to the downside, or even with a risk entry, and one of the touches up here with a slightly tighter stop loss here. Ignore the numbers here, guys. This is just a drawing. This is just, you got to go with what's relative. This is just used as an example here. Also, when we have broken and we're correcting sideways through this trend line here, you're also able to slightly, sometimes you can also slightly evolve your lower trend line, and it encompasses just above the price action that we have here. So you can see that the correction is dropping to the downside and slightly forming underneath this. This is also very nice, as when you're able to put your stop loss in here, you're able to get your stop loss back inside this larger structure like so, which gives you another level of protection for your stop loss here. So this doesn't happen so often, but when it does, I really do like to see this, as you have the protection of the high around here and the protection from this lower trend line. I would not be looking to be overly aggressive and clip my stop loss and have it down here, as I feel that for the sake of a few extra pips, you can have that fantastic extra bit of protection here. And you know, protect your stop loss from the price action around here in case we did come back up to create another high like so before dropping to the downside. So safety first, in my opinion. It's best to err on the side of caution in these scenarios and just give yourself as much protection as you can. So just to summarize here, when I rein in my trend line and separate structure is when the trend line here is cutting through price action. If this trend line was to be like so underneath, I would not be reining this in. I still see this price action as being within this overall larger structure here. So that's the difference here, guys. So I hope that makes sense, and I hope you've taken a little bit of value away from that there. So back to Euro Kiwi. Like I just covered there, I do see price action being still inside this larger structure here. So what I am waiting for now, I wouldn't be looking for an entry around here. You can dive into this on the 15-minute. If we delve a little deeper, you can see that we have this structure like so to be drawn on. However, I feel that there's too many moving parts, there's too many variables with this trade here. We have got this move down, and it is a sideways correction here, but we have moved into this correction correctively. This also going to be doubling this up with the fact it's going to be Sunday evening, Monday morning, start of a new week. We do typically see a little bit of corrective price action as price, you know, the dust settles after the weekend and price tries to find its feet. There is an option for this to create a 1, 2, 3 pattern here. We have 1, 2, and then potential for this to scoop back to the upside here, correctively moving back to the upside like so, and looking for a third touch risk entry here. This would be a valid entry. However, I wouldn't be looking to take a risk entry here. I would be waiting for price to commit impulsively to the downside and then looking to enter on that first sort of 15-minute flag that we got around here. The reason being is that that would enable me to get in with either probably a reduced risk entry around about here, with, let's say, a 25 pip stop loss being more than conservative, and that would enable me to easily get to break even before we approached this lower trend line here. You can see here that that's almost 5% just to the low here, and we have a lot of downside potential on this pair, so I wouldn't be rushing this. I wouldn't be getting in with an unnecessarily tight stop loss if I didn't need to. Alternatively, if we just chop around sideways, so let me clean this up a little bit. So if we just chop around sideways here and price doesn't give us this risk entry sort of third touch up the top here, and we just correctively move back down, I won't be rushing this trade. We have had a larger correction, so I am now looking for this to break to the downside and continue to push lower. If we break below this low of the structure here, I would be looking for any sort of small structure here, visible on the 1 hour preferably, but likely to be visible on the 15-minute. Price is not likely to start to form another very, very deep, very, very well-formed structure here on the break of this, because we have just come from a very large correction. You see, so when I zoom out a little bit here, we go back out to the 1 hour chart. What you can see is that price has fallen into a correction here. So we've correctively dropped into a larger correction. And this is very, very typical. When we correctively move into price action here, it's indicative of us starting to create a larger correction pattern here. So we've fallen correctively into this correction. We've formed this perfect 1, 2, 3 style pattern. I wouldn't be hanging around waiting for perfection here on the break here, because we've had such a large, well-formed structure here. It's likely that what follows this is going to be much shorter, not hanging around and impulsively pushing to the downside. So as I also covered earlier as well with the lower trend line, I would not be looking to take this on the hover inside here for the reasons that I mentioned earlier, in that you can very, very easily come down to price action here, just get wicked in by this and then trickle back up and create a bit of a deeper structure. So I would not be looking for this risk entry here. This is valid, guys. If you want to take an entry like this, it is valid. I have just found for myself over the years and through trial and error, a lot of back testing and a lot of hard lessons to be learned, that entries like this do not serve me so well right now. They have worked well in the past, but I've noticed over the past 18 months or so of data that I am getting tagged in and tagged out of these positions very, very often. So what I'm waiting for is either a risk entry around this area so I can move to break even before this large inflection point, or simply an impulsive break below and then looking to capitalize on that first correction here. So that's Euro Kiwi covered. Moving on to the next pair. The next pair in the top 6 is dollar yen. So dollar yen is still looking fantastic to move to the downside. However, we have had, like we have on a few other pairs, quite a lot of sideways correction over the past week or so. So on the daily chart, you can see here that we have aggressively moved to the downside, back to the upside, and we have then aggressively pushed further back down into the move. And very similar to what we've seen on the DXY and euro dollar and some other pairs, we have started to form this sideways correction now for the past couple of weeks. If I drill down to the 4 hour, not much has changed on this pair. Overall, we are still looking at this as a larger sideways correction for then pushing to the downside here, and we have a lot of downside potential to capitalize with on this pair. So there is no need to rush, as you know, there's ample opportunity and ample percentage to be made in this move to the downside here. So zooming in a little bit more on the 4 hour, what I'm looking at right now is that I am connecting price action to the most recent structure here. I have evolved my lower trend line from being this sort of ascending structure like so, as that in my eyes didn't really make that much sense anymore. So I've brought in my lower trend line and I am actually cutting through this wick here, as I just see this as noise. This is just a bit of volatility. And like I've talked about on a few of my videos recently, I wouldn't let this one wick put me off the other 99% of the body of this correction here. So I'm just cutting through here. 99% of the price action is within this structure here. This is just one wick, one bit of volatility, which occurred on the 15-minute chart. So I'm not going to let that negatively impact how I'm drawing my structure here, as that doesn't really make much sense. So what I'm looking for right now on euro dollar on the 1 hour chart is, overall, we know that we're still looking for this to push to the downside. We can, of course, keep the probable and the possible in the back of our mind, and there is a chance of price moving back up towards this ray line high here. So correctively moving back up here for a move from the top here and looking for that risk entry or that first sort of continuation pattern from the top up here. However, I do see that as being very unlikely to occur. There is a chance it can happen, but I do see price action pushing down pretty impulsively here. We are just creating a sideways correction whilst the market decides what it wants to do next, and we're just looking to capitalize on this further to the downside. Now, if I just zoom in a little bit more on this price action like so, we have a few options in the ways that we can take this trade. What I would be looking for here is price action is correctively moving down like so, here towards this lower trend line. Now that doesn't fill me with confidence that we're ready to break this to the downside yet. So I would not be looking to take a reduced risk entry on the break of this pattern. You heard me just covering this on Euro Kiwi, and it's the same reasons across all of the different pairs. I would not just be looking to dive in with a reduced risk entry here, as it would be very, very typical for price to trickle down a little bit lower, tag you into the trade, and then push back up into structure. We have correctively fallen into this move. When we correctively move towards the edge of structure or correctively look to break a structure, that doesn't fill me with confidence that we have had this impulse correction and we're looking for further continuation. So when we're correctively moving down like we say, I'm going to sit on my hands, sit on the sidelines for a little bit longer and just wait for price action to give me a clear signal of what it's going to do next. So I already know on the weekend that I am not looking to take a reduced risk entry on the break of this lower trend line like so. What I am looking for, however, is either, as we are moving correctively down here, is either for price to retrace back to the upside, looking for another touch at the top of structure like so. So we have this one touch here, two touch, and we have these touches up the top here as well. So I am looking for either price to retrace back to the upside and looking for either a risk entry in this area here or a push down and capitalizing on that first 15-minute flag like so that we may get here. Alternatively, if we don't push back to the upside, I'm looking for an impulsive break below this structure here and then a correction here. So an impulsive break below here and then looking for some form of sideways correction like so that I'm able to enter with here. So if I just size this up a little bit here, what you can see here is that you are able to get in with rough, depending on the size of the candles, we may be able to get in with around 15 pips here. That's over 1.7, that's about 1.75% down to this ray line low, which we know is not where we're looking to take profit here. We're not looking for this to be like a short 2-to-1, 1-to-1 sort of trade here. We are looking for price action to break this ray line low. You've heard us talking about this in quite a few videos recently, and if you haven't seen them, go back and check Read Only channel on Slack as well, because Jake and I, as well as Jake and Benny, have been talking about this pair as well, looking for price to break the lows, and then we have a lot of potential with this pair right now. So there is no need to rush this as well. If we don't get the entry, and I'll be covering a third way to enter this trade in a moment, if we don't get any sort of viable entry around here, we don't need to rush. We don't need to go off script and start becoming outcome driven and not sticking to our processes, because we have so many opportunities to enter this position to the downside here. So if I just zoom back in, what you'll be able to see is that, yeah, okay, so we may push to the downside and create continuation here. If we push too low towards this ray line, I will not be looking to enter this with a reduced risk entry or a risk entry before hitting this ray line here. I will sit on my hands, wait for price action to break below this ray line convincingly. So I'd like to see a break on the 4 hour or the 1 hour, not just a little 15-minute break, and then create continuation pattern to tell me that we have broken this. We are now confirming the directional change. So we are now confirming that we're looking for further downside, and I'll be looking to capitalize on this pair like so. If we break this ray line low correctively, however, so if we break it in this sort of manner, like what we're getting at the moment in the current structure, if we break it like this, I will not be looking to enter this to the downside with any sort of reduced risk entry. This to me is just screaming out that we're just creating a slight extension of the pattern, and then we will very likely be looking to retrace aggressively back into price action here, and then looking to form continuation and push back to the upside here. So it's very clear what I'm looking for and what I'm not looking for. Okay, and it's good, guys, to also be aware of exactly how you would like to trade this pair and what you're not looking for. So if you do see something that you don't like, you know very, very clearly and very, very objectively to stay out of the market. So I know that I want to see this impulsive break below and a correction. Anything that breaks this low correctively is not of any interest to me. I would rather sit back, sit on my hands, wait for the market to give me a setup that I do like the look of. So that's what I'm looking for here. So just to summarize, if I go back out to the 4 hour very quickly, what you can see here is that we are expecting further downside on euro dollar. There is a slight possibility of price moving to the upside here to create this second touch at the ray line high. We could look for a risk entry here or the first flag. However, this is not so likely to be occurring. We have a very similar couple of scenarios to occur at the top of this sideways correction here. If we push back up, we have this 1, 2, 3, potentially a fourth touch at the top of the correction here. Alternatively, if we don't get either of those two and we just break to the downside now, we have the option to enter with a reduced risk entry here on the break of this lower trend line, or waiting for this to impulsively break below this ray line low here and carry on taking this to the downside. If we approach this correctively, this trade to the downside is off the cards temporarily, and we may be able to switch our bias and then look for long trades to the upside to potentially then capitalize on this move. After a little bit of further price action, there will be long trades on the cards as well that we will likely be able to capitalize on. So guys, I hope you can hear the number of opportunities and different ways that we can trade this pair. There's so much opportunity and so many different ways that we can trade these pairs up and down. There's no need to rush. There's no need to have any FOMO. There's no need to go off script and just become outcome driven. So that's dollar yen covered. Hope you've taken some little mini lessons away from that, and moving on to the next pair in the top 6. Okay, so the next pair in the top six is Dollar Swiss. Now, Dollar Swiss has taken a little hiatus from, being on our watch for a few weeks now, but it has come back. It is looking very, very nice. What you can see here on the daily chart is that we have this longer term descending trend line here, capping price. So we have this all the way back in April 2019. We have this one touch up here, second touch here, third touch here, where we have aggressively pushed up, retraced back off this, and now, like a lot of pairs for the past few weeks, we have been pushing sideways, correcting sideways, creating new structure. If I just drop down to the 4 hour, there's also a very, very close similarity here with the DXY that I'm going to compare side by side in a moment for you guys, so you can see the two. The reason why this has made the top six is because when the DXY and Dollar Swiss line up the same, there is a very, very good possibility of them playing out in the same direction. So if I just pull them up next to each other here, so we find the DXY on the left, and on the right we have Dollar Swiss. Now what you can see here, if I just go, so I've got the 4 hour chart on the DXY like so. I just clean this up. What we can see here is that with the DXY, we have this move up, move down, this corrective move up towards this ray line third touch here. Now on Dollar Swiss, what we're looking for right now on the 4 hour chart here, can you see the similarities here between the two? When we place them side by side, we have this move up, move down, this corrective price action, and we are looking for further downside at this ray line high. Now let me just draw something on for you guys just to show you the similarities between the two. So we have this here, take this over to the right. What you can you see how closely correlated these two look right now? So let me just put this back on here. So yeah, you can see here, we have this price action here on the left on the DXY. I'll just zoom in a little bit for you guys. And then here on the Dollar Swiss on the right hand side on the same time frame, so both on the 4 hour, you can see how closely correlated they look. We are looking for the DXY to push to the downside here, and we would be looking for something very, very similar on Dollar Swiss as well. So overall, we are expecting a push to the downside. However, we may not get it immediately. Very much like the DXY, we could be seeing this just push a little bit higher to the upside before we then get that push to the downside. So if I just go back to Dollar Swiss here and zoom in a little bit, if I go down to the 1 hour chart, what we can see here is that we have this ascending trend line drawn in like so. So this is the longer term ascending trend line that we would be ultimately looking to break, but we have this more short to medium term ascending trend line drawn in like so. Now if I just draw in some upper structure for us here as well, so you see this, we have this sort of price action here. So we have this one touch, two touches here at the top. I would call this the same, so just one touch. And we have then moved down and correctively moved back up to create this second sort of touch at the ray line high here. Now look, we could move to the downside from this area like so. We have started to impulse down. However, Dollar Swiss in its nature can be a very corrective pair. I would not be at all surprised to see price react to this lower trend line around here and start to push back up towards this area around here. Now there are a few different ways we can enter this. There would be this 1, 2, and then potentially a third touch sort of area here on this ray line triple top that we may get an override, so a retrace, and then looking for that first sort of 15-minute hover along this sort of area here. Or you could take this as a risk entry if you so desire. If we get very corrective and slow price action to this area here, a risk entry would be a viable option to take this as well. It's not something that I would personally be looking for. I would rather have the confirmation of the retrace and the correction as well. However, we could also push a little bit higher. So if I just zoom out ever so slightly and I put a ray line in here, what this would be quite interesting. If price action was to push higher, so let me just clear this up a little bit. If price action was to push a little bit higher and move all the way towards this outer structure here, there is a chance of price breaking above this trend line here, just touching this sort of ray line high, retracing back into price action here and forming this sort of continuation pattern like so. This would be an absolute gift from God sort of trade here. This wouldn't happen so often, but there is a chance that it does occur. And what would be fantastic about this is if we correctively move up to here and then impulsively break out and retrace, we've got to think about what the retail traders are doing, what the herd mentality is thinking. When we retrace here, people are thinking that the short move is off and now we're looking for longs. So this is likely to trap a lot of traders on the wrong side, and therefore the momentum that we would have behind us to take this to the downside would be absolutely incredible. This is one of my favorite setups when price action breaks out of price and retraces back in and forms a correction. This is one of my favorite setups to take, and they're extremely reliable as well. So I highly recommend that all of you go and back test these as well, as they don't occur so often, but when they do, they typically work out pretty nicely. So that is what I'm looking for with dollar Swiss. If I just go back out to the 4 hour, just so we can get a slightly bigger perspective of what we're looking for here. Ultimately, we are looking for this to push to the downside, whether it goes from the top of structure here, from this ray line here as well for that third touch that I drew in before, or if we potentially just push a little bit lower to the downside. I wouldn't be looking to take this on a hover above the trend line for the reasons that I've stated before. I would be looking for this to break below, then form some sort of continuation pattern like so. As you can see here, guys, that we've got so much opportunity to take this to the downside. We do not need to jump in unnecessarily early. We do not need to rush this, as you know, even here on the 4 hour chart, if I just drill down to the 1 hour, we can see this even clearer. If I just zoom in a little bit, even on the 1 hour chart here, if we get in with some sort of reduced risk entry around here, maybe 45 pips. This is just an example here, so it might likely be able to get in much tighter. Even with such a large stop loss, we even have down to the bottom here, or is it over 10% here? So if I just draw this on, yeah, just around 10%, just to this ray line low here, and that's with a 45 pip stop loss. So likelihood is we'll be able to get in with around 20 or 30 pip stop loss if this breaks down, forms a correction here. Just bear in mind we have this ray line low here. This is the 90% rule of this correction. This would be the first inflection point. However, as the higher time frames are stating that it's looking like it's wanting to push to the downside, I would not be at all surprised for this to break this ray line here and continue pushing down to lower structure like so. So guys, that is dollar Swiss. A few different options, a few different ways to trade this one, looking very nice. And I hope you took something away from the correlation there with the DXY as well. So go back and try that for yourself, put the screen side by side, compare the price action with one another, and it'll be very interesting what you take away from this. So moving on to the final pair in the top 6, which is dollar CAD. Okay, so final pair in the top 6, which is dollar CAD, starting on the daily chart. Now dollar CAD, it has been correcting sideways for a couple of weeks now. We haven't had that much price action that's really looking too ready to go recently. However, it's not off the top 6 because it is looking very nice to the downside still. If I just drop down to the 4 hour chart, what you can see here is that price action has been falling very slowly, very correctively, and we may still get this pop back to the upside here to break this high like so before the longer term sell. However, the more I look at this, it's looking less and less likely that we are going to be breaking back above this sort of descending trend line here, and more likely that we are creating more of what seems to be a bit of a running channel at the end here with a drop, a correction, and looking for further downside. I'm just going to drop down to the 1 hour chart just so we can get a clearer picture of this. So what you can see here, I've connected these two highs here. So we have 1, 2. Price has impulsively here, created a larger correction around the middle here, and then impulsively pushed back to the upside here. We are now sort of pushing around, hovering around this area, impulsing down, correction, impulse, starting to create a bit of a deeper correction. This is not the cleanest price action here at all. And as it sits at the moment, there is not a viable trade on really in my eyes. We can argue that there could be a risk entry available at the top here. However, this is not a trade that I would be looking to take, as I do see this having as much opportunity of moving back up as it does to the downside. So what I will personally be waiting for on this pair is more of a corrective move back towards this sort of lower, this descending trend line that we have here. So I'd be looking for price action to correct sideways, sort of coming back up in this sort of fashion, giving us this scooping nature like so, and potentially giving us a risk entry here, or potentially breaking just above, like I just talked about on dollar Swiss, breaking above, piercing above this ray line here, and then breaking back into structure here. You know, if we get here very slowly, very correctively, there is a viable risk entry to be taken in this area here. Or if you do want to just wait for a little bit more confirmation, you can wait for that first push to the downside, and then wait for that first 15-minute or 1 hour correction that we get here, and then look to capitalize on this move to the downside from there. You know, we have very good risk to reward available to us, even with a 50 pip stop loss around here, even with a 50 pip stop loss, and I'm sure you'll be able to get in tighter as well. Down to this low here, we have just under 7% available to us just to the low here. When I go out to the 4 hour chart, we are looking for this to break even lower and to continue pushing all the way down here. It's very unlikely that we'd get here all in one move. If I size this up, That's it's almost 21%. It's unlikely we get there all in one move, but the great thing is we don't have to worry about that because it gives us plenty of opportunity to capitalize on this trade as well. Now, some alternative ways to enter this position if we don't get this set up at the top here would be if we have this ray line low at the bottom here. This would be the first inflection point that I would just keep in the back of my mind. I wouldn't see this as anything too major to be concerned about, but I'd like to see what price action did around this sort of area here. So if we don't come back up the top here and we continue to push to the downside, there is the option here of entering with a sort of reduced risk entry if we break below the lows here. I wouldn't want to be taking this short into this sort of price action. I've been talking about this quite extensively in this video, why I'm not a fan of taking reduced risk entries when they're above structure. However, again, like I've been talking about, if this was to break below, impulsively break below and then create continuation, there for me, that is a great signal, and I'm very, very happy to then get involved in this trade like so and look to capitalize to the downside here. Now, the thing is, it's like we don't need to rush. We don't need to jump into this trade unnecessarily early because we have so much downside potential here. So I'm happy to sit on my hands and wait for the market to give me an entry that I'm happy with, that's in my trading plan and that I've taken over and over again and tested in my back testing. Okay, so even if we come back down to here, we create a correction underneath the lows of this structure here, we still have, and that's a huge stop loss as well, we still have around 10% down to the bottom of this structure here. So I'm not looking to rush this whatsoever. That's another alternative here. Now look, we have also been discussing that there is a chance of price moving back to the upside again. Now, if we did impulsively break this high and this ray line high and create continuation above both of them, that's very important. It has to be above both this trend line and this ray line. Then we have a short to medium term buy on the cards here. Now, overall, we see the bigger picture, the longer term trade on this is to the downside. However, you know, this short to medium term buy, it could be viable. We never fully broke this ray line high here. We came very, very close, but we never broke it. So that's always in the back of my mind that we do stand a chance of pushing back above here. So I would be potentially keen on taking a long trade here. If we impulsively push up here, create sideways continuation, and then we have the ability to enter here with a, you know, a reduced risk entry or a risk entry depending on what price action gives us. If I just drop down to the 15-minute chart and we zoom in so we can see this a little bit more closely. So if I just zoom in a little bit here, so yeah, likely that we'll be able to get in with less than a 50 pip stop loss, and we have a good 7-to-1 sort of risk to reward on the cards to the upside here for this short to medium term play to the upside. So guys, we've got plenty of opportunities on the cards here with this pair. You know, we don't need to rush. We don't need to have any FOMO. There's so many different ways we can trade this. And then the great thing is, even if we do push up to the highs here, we still know that the longer term trade that we're all looking for is to the downside. So that gives us an even better opportunity to sell this from the highs up here, and gives us even greater risk to reward to the downside. So guys, I hope you've enjoyed that. That's the DXY and the top 6. I hope you've taken a lot of mini lessons away from this, and you have similar pairs on your watch list. Please let us know as well. And now I believe Jake is going to be taking care of the wildcards.
So now moving on to the wildcards. So this week we've got Singapore dollar, Aussie 200, Kiwi dollar, Aussie dollar, and gold. So all looking very, very nice. A few other pairs could have made the list, but Benny is going to cover them in the requested pairs. So first of all, Singapore dollar. If we go to the weekly chart, we can see that weekly double top. This has obviously been on the watch list for a while now, so we know the high time frames. Again, impulse down, looking for that continuation to the downside. For our chart, again, super, super clean. So Singapore dollar is very clean, responds to structure very well. As you can see, dropping on the 1 hour chart. So as Mark spoke about in the webinar last week, we dropped into this Falcon flag from a correction. So we obviously don't want to rush into this. I know a lot of people, and Neil broke it down very well in the midweek, not trying to call the top of the second high here, as we don't know the angle, because this could have easily been this angle, this angle, this angle. So now that we do have that confirmed angle, this is what I'm looking at. And as you can see, we've moved down, had that middle section, almost had another middle section. So what I'm personally looking at is, again, if we just get that corrective move up here, I'll be looking for the risk entry here on that 4th touch. So very, very clean entry there. Or if we get that move up, that small bull flag, and then we get some reversal nature like that, drag that out, that's looking really good. So stop size, obviously Singapore dollar is a little bit different to currencies. So again, you could probably get in with maybe 40 pips. Again, depends how aggressive you want to go or how tight you want to go. again, there's no need to rush this position or get too tight, because even to the bottom here with a 40 pip stop, there's a 5-to-1. So even if you want to go 50 pips, there's still over 4%. So, and that's just to the low here. So that's looking really nice. What will I also be looking at? If we get here slightly impulsively, so if we get 1, 2 big candles, will I be trying to get in here? Definitely not. As you guys know my style, I'll be looking for either the move out, the retracement, and then the 15-minute flag, or I'll be looking at 2 impulsive candles, and again, just wait for that push down, that first 15-minute flag because of the structure, and again, using the 15-minute flag because we're out of structure here. We're in a very good area, and because we're moving correctively in the whole structure here. So be looking at the first 15-minute flag, and again, you can get in much tighter there, but still a very safe stop. So let's say you can get in with probably 35, 40 pips again, depends how large that 15-minute flag is, or 30, and again, here we've got over 5% at the bottom here, so looking very, very nice. What will I want to see if it goes early? So if this just drops out here, which it definitely can do, will I be taking this trade here? This has to be, let's size it up here. So the same thing, let's go 40 pips. We've got just over 1% to the low here. So I personally will be taking this trade if it does, because again, let's go to the 4-hour chart. This isn't looking to reverse here. This is just the first inflection point, and then we're looking to take this down to the next line in the sand right here for 10%. So that's the difference here, because we're at the start of the run. We're at the start of the move. We've got a lot of room to the downside. That's where I'm happy taking that trade here. If this was at the bottom of the run and there was only maybe 2-3%, then I wouldn't be taking the trade. So if we do break down early, again, just looking for that flag to take the downside, but very, very simple in Singapore dollar. One of my favorites for the wildcards for the week. So moving on to Aussie 200. So I know a few people, let's go to the daily chart. Again, this is just squeezing very, very nicely. Very, very clean and very expected in equities. The 4-hour chart, this happens all the time. So I know a few people have their trend lines like that, and they're seeing this as a breakout and then maybe a flag to the downside. This may occur, but from my experience with equities, they do like to respond very well to parallel trend lines. So obviously parallel being these two lines. I'm looking at this to move, again, as you can see there, move up here. That double top is very, very favorable. And again, if we move a little bit higher, then I'll be taking the entry just up here. But equities, I like taking risk entries. They respond very, very well to risk entries, especially they respond well to double tops. So if this does go early, again, I'm not looking to get in any of the flags down here. I'm happy taking the risk entry or just waiting for a more developed flag when it breaks. So what will a more developed flag look like? That would look like a break. And then again, like that, taking that to the downside. But as you can see here, let's just get rid of some of these. You can see here that we've got that simple move down. This is, again, could be easily part of the middle section to push up one more time before rolling back over. But if you have your trend line here or where I have mine, there's no difference. Again, you're playing the price action and the nature of price. So this is looking like, obviously we're coming from that correction. This looks like it could easily just form that squeeze higher. And again, if you backtest equities, you see it all the time where it'll correctly drop back down, move back up again before committing to the reverse sell. So one of my favorites again for next week. But again, if you're not too familiar with equities, definitely do a lot of back testing. Let's drop down the 1-hour chart as well. So very same thing, just waiting for that push up for the double top. So definitely go back and back test equities, especially the S&P 500, the Aussie 200, because they do respond very well to structure, as you can see, very nicely, especially in March and early in the year. So that's it for Aussie 200. Moving on to Kiwi dollar. And again, Kiwi dollar is my preferred pair over Aussie dollar. Again, we've got the daily chart. This is looking really, really clean. So we've got that push up higher and it's forming that ascending channel. So I know Mark spoke about this. I'll break it down in Aussie dollar that it could be going higher, but what am I seeing on the 4-hour chart? Simple nature here. So we've impulsed up and then forming that running channel. We're forming the ascending channel to come back down. And again, what have we got here? Very, very simple. Zoom out a little bit. All this is just that very clean middle section to head up one more time with a bit of dollar weakness before taking the overall sell. So really, really clean. This may need a little bit of time to play out because we've got about, let's see how many pips we've got. We've got about 100 pips, 150 pips to the top there. So Kiwi dollar, it does move a little bit slower than say pound pairs. So it may take a day or two to play out. But this is obviously being on the wildcards. I just want to give it a little bit of time to play out. But if it sets up for this double top here, or that outer third touch, obviously this is the perfect example of I'll be looking for the double top. So how do we want to see that? So we'll draw in this middle section. and then we'll get a breakout. If we get a bit of a bull flag, I won't be taking the long, and then again, I'll be looking for that ascending nature into that double top. If that happens, I'll be taking the double top. If not, and we only move up to the double top, so say we do push up, and it's in that nature, I won't be trying to call the top, because what are we having? We're having impulse, correction, impulse, correction, impulse. This could easily tag you in, come back up here before dropping. So don't want to call the top there. Happy waiting for that push down and then the confirmation via a 15-minute flag. So that's what I'll be looking at. Or conversely, if this goes higher, if that just moves up like here, and then we get a reversal entry up here. That's my preferred entry, obviously, but I'm definitely looking at this double top here because it is so clean. So P, you don't want to overcomplicate, give it a bit of time, but that's what I'm looking at for that one. The same thing with Aussie dollar, sorry. So Aussie dollar, Kiwi dollar respond very similar. So a little bit different on the high time frames. And again, you have to be careful with this one because it could go higher. Mark broke this down very well in the webinar last week. So the daily chart's looking clean. The 4-hour chart. So I know a few people have a couple of different lines drawn. So you could have that drawn like that, which is definitely valid, very valid. So we've got impulse up, correction, impulse up. This could be a larger bull flag to head higher. So I'm definitely being careful of that one. But what I'm looking to do now is a bit of pattern separation. As you can see, we've got, let's move that other way. We've got the ascending channel breakdown, and then again, we formed another ascending channel. So if we get some nice corrective nature up here and almost that squeezing pattern, I'll be looking at the risk entry in here. That'll be looking very, very nice. But again, I'll be a bit more active on my management because the high time frames are looking quite bullish. So if this moves down here, again, as Mark said, that could easily be that. We'll go to the 4-hour chart to make it a little bit cleaner. That could easily be tag you in, get a nice short-term sell, but it could turn around here for their overall buy. So just be careful. It definitely doesn't have to turn around here, but that's what I'm looking at here. So moving on now to gold. So gold is one I'm looking at. It's not my favorite for the week, but I just want to include in my wildcards because it does take it needs a little bit of time to develop. So as you can see, the high time frames, we're squeezing with that overall double top on the weekly chart as well. We've obviously broken out of this ascending channel, had that bull flag to the upside, and now we're just getting some very squeezed, kind of choppy behavior. So we can draw trend lines in every angle. I know a few people may have kind of this expanding pattern on here. That's perfectly fine, but I'm obviously paying attention to this, but if you start drawing lines every way, you may get a bit confused. So if we go down the 4-hour chart, what am I looking at now? So as you can see, we've had that impulse up, bull flag, impulse up, and then we've had the breakdown, bear flag, obviously, and breakdown. So I'm looking at this to obviously reverse now. We've had that breakout of that ascending channel. 4-hour chart's looking really nice. As you can see, the scoop, we've almost got that M-style pattern. So we've got almost got that M-style pattern to the downside, looking very, very nice, especially with gold. These play out very, very often. So what I want to see is we broke down, formed that almost descending channel, broke back up. And what am I looking for here? So I'm looking for just a simple move up here. I'll draw that again. So if we get push up here and almost ascending channel like that, then I'll be happy taking the risk entry because that's looking very nice. Otherwise, because we're not backed by super high time frame structure, I'll be looking at the move up, the move down, and then the 1-hour flag here. So the difference is if we don't get a 3-touch reversal pattern, that's perfectly fine. I'll look for the first push. But with this scooping nature and the M-style pattern, gold, again, looking very, very nice. It may be ready more Tuesday, Wednesday, but definitely you want to have this one on watch. So the wildcards for this week are looking very tidy. I'll let Benny take the requested pairs over now.
What's going on, traders? Welcome to the requested part of the Sunday market breakdown. Hopefully you all have enjoyed it so far. Just wanted to say that I'm actually very excited to be able to jump on the Sunday market breakdown. Unfortunately, it's not for the best circumstances, but we are all wishing Mark a speedy recovery. So let's jump straight into the requested pairs. So first one up is Dollar ZAR. This one actually is shaping up pretty well. It was highly requested. So if we just jump back to the daily, you can see zooming all the way out, this is actually at all-time highs. So very good inflection point in terms of prices now sitting at this double top at the all-time highs. So for me, this does have great higher time frame potential. Jumping down to the 4-hour time frame, you can see the difference here and what I really love to see on a double top in terms of this is an impulsive leg towards the upside. Now we are slowly approaching the double top in a very nice corrective manner. So shaping up quite well on the daily, on the 4-hour, and then on the 1-hour, this will be really used for timing for myself, as what I would like to see for a position like this is if we can just stay in this range and continue up very correctively, and then I'll be looking for any kind of risk entries up the top. Obviously, it doesn't always have to stay in this corrective price action that we're just shaping up right now. There's actually multiple ways that you could forecast this right now. So I think what I'll be personally doing is rather keeping note of this inflection point and then just monitoring it there, because what we could actually see is we could break off into another pattern separation and then really get that third touch, that risk entry at the top here, and then be looking for any shorts. I think it's key for these type of situations not to get too caught up in forecasting all these scenarios. We know where the inflection point is. We know where we want to be taking a position like this. So what I'll be doing, like I said, waiting for any third touch at the top there, or any kind of 1-hour retrace that's somewhat significant off a smaller scoop or anything like that. So any intraday price action shaping up at this level is going to be an extremely high probability position in my eyes, and definitely made it to my wild card. So that is $ZAR. Next up is Sugar. Now this one's obviously made the list quite a few times. If we zoom out on the weekly time frame here, you can see overall at very, very good value area at 1, 2, 3, and we've come down quite impulsively even on the weekly time frame, but that's pretty common with the commodities as going through this time, is they've had quite the crash at the moment. So majority of the commodity pairs are sitting at very, very good value. That impulsive leg doesn't negate the entire position. We just wait for extra confluence to shape up and some corrective behavior at the areas of value. So that's the weekly time frame. Jumping down to the daily just to show you how we're kind of approaching this level. Here's that big impulsive leg, put impulse back up, impulse, and then now look what we're doing, very corrective behavior. So overall, shaping up very, very good at the moment. I'm liking the higher time frames more and more as this progresses. Onto the 4-hour time frame again, you can see the corrective nature as we approach that high value area, which is not common and something that we want to see at these high value areas. Any corrective price action there signals to us that it's giving us a higher probability that we will actually reject this level. So that's what I'm personally looking at on the 4-hour. Jumping down to the 1-hour time frame, you can see here this is using a little bit of pattern separation now. So second touch, push up, breakdown again. We didn't quite reach the overall higher time frame structure here, but I was still looking at it. We have the probable and the possible. So for myself, now that we've broken down, I separate the pattern again and really just waiting to see if this is acting as a form of a double bottom. We could ultimately still form into a larger pattern. So something along these lines here. And then I'll be looking to take that risk entry as well from that third touch. However, at the moment, giving off the market what we got, if we can get a push up, a hover, I'll be looking to take that position, as that definitely fits my plan. Shaping up here, let's just see kind of what kind of risk reward we can get. Let's say we go 22 pip, and zooming out, the first kind of 90% is just this area here, which is 4%. Next inflection point sitting at 9%, and then ultimately, if we want to zoom all the way out, this can actually be a monster position. So you can see here to the top there, you're sitting at roughly 25% if you are going for those longer term commodity holds as to this price crashing down. So there's honestly a couple of ways you could play this. You could play it on the long term purely because those technicals do fit that strategy, and I feel like there is a lot of room to move, and it's something that should bounce back quite nicely. But ultimately, you yourself have to be very comfortable with a trading style like that, holding through the impulse, the corrections, because ultimately you're not going to see this run just all the way up to the top. That's quite unlikely. What you'll see is the market playing out and giving multiple opportunities on the way. So all that means is there's no need to get emotion. There's just more possible entries on the way up. So for myself, I personally won't be holding it for the super long term. I won't be giving a lot of profits back, but I will be letting it ride a little bit more than a more aggressive valid position. But we'll see how that one shapes up. Next pair is the DAX. This one actually made my wild card last week as well. So if we just jump out to the weekly time frame first, you can see like most of these indexes, we've had a huge crash and now we're kind of recovering from that and just starting to stall. So when you look at these high time frames, you might not see a whole lot, which is fair. And then digging down to the daily, you can start to piece the puzzle together a little bit more. So here's that market crash, push up, a little bit of a correction, impulse, now correcting back towards the upside here. So 4 hour again solidifies that picture more nicely. So you can see we're now starting to get some good corrective behavior, which is ultimately what we want to see. Now, what I like about this certain position is the 1 hour time frame. So you can just see back here, we didn't quite reach this third touch at the bottom here, which is what I was ultimately waiting for. We've just pushed back up, and now we kind of need to let the market breathe in my eyes. So what I'll personally be waiting for is another push down, and if we can get some form of quicker 3-touch pattern at the bottom here, ultimately lining up with this here, I'll be looking to take a long position from that area there. That's personally how I'll be playing it. It really depends how we see. If we come all the way back up, push back above and start forming tight flags, that is still a valid opportunity. But ultimately, I do prefer these larger flags at the moment just purely because we are recovering from that crash. So that's personally how I'll be playing that one. Next pair on the requested is Aussie Kiwi. So again, jumping out to the higher time frames, you can see here we had this overall larger weekly double bottom and this third touch here. So key inflection point, and what did we get from that inflection point? A large impulse on these higher time frames. We have not had any kind of correction just yet to continue to the upside. So for myself, I'll be jumping down to the 4 hour time frame here, and you can see we might start to be forming that first correction from that impulsive leg, because this is just had these smart impulse, pullback, impulse, correction, and then continuation towards the upside. So for myself, I'll be waiting for a few different scenarios I've got forecasted just here. Jumping down to the 1 hour time frame, you can see we could potentially get this double bottom if we come down corrective, and if that fits your plan, that would be the first opportunity for a long. Ultimately, we don't have to stop there. This is a larger expanding, so I don't personally like to get too aggressive in these areas, but what we have here is a potential for a double bottom. So we could come down, let the market play out, we could get a risk entry or a push up, hover from this level, continuation towards the upside. Ultimately, we can continue to push down and then be looking for any longs from the bottom of that expanding there. The higher time frames are on your side, so we don't always have to wait for perfection with these type of setups. However, just given the daily time frame here, we are very far into that run. You can see we're almost at the top here. It's only 113 pips away. So for myself, this will personally be played with a lot of patience, and I'll be waiting to see how this larger expanding forms. But for those guys who are still obviously interested in this, I believe the double bottom from this first area here will be your first choice. And then we also have a potential double bottom. Ultimately, that third touch there will be quite significant as well. But ultimately, there's a few Aussie pairs that did make the requested pair list, and I think they're things like Aussie dollar, which I know Jake has previously covered, which is very, very good. So for myself, next one on the list, Aussie Swiss. Same kind of thing, starting from the weekly time frame. You can see overall we're actually at historic lows, which we've bounced back from now, so quite a big impulsive leg towards the upside. We had the 1, 2, 3 rejection as well, broken back into that pattern there. Daily wise, jumping down here, you can see we've had this first sort of correction behavior on here, and now we've just pushed up to the upside here. So jumping to the 1 hour time frame, as this really clears out the picture. Zooming out, you can see this is common Swiss pair behavior, right? All of this stuff to the left just here, very common Swiss pair correctiveness. But what we did get is these nice impulse, correction, impulse, correction, impulse, correction. So I do like this previous behavior just before we started to form these larger corrections here. And these corrections here actually look quite nice. And what you can see would happen here is, I'm sure a lot of you guys last week who are requesting this and watching this was waiting for that possible third touch here, and you can see we've just pushed up and now starting to form our own little flag. So for those guys who like the reduced risk entries on these Swiss pairs, let's just size this up as if you were to take something like that. So you can get a decent stop, and that's a stop well below with 50, or if you want to go a bit tighter, 45 pips. And what that will do, let's zoom out to the daily so you can see the ultimate kind of where you'll be targeting. First inflection point for myself, if I was to long a position like this, would be the 4 hour time, which would be this most recent high just here. So you can see that area there. That would be quite decent. You will still get 2.5%, so you'll be well in profit, enough to at least lock in 1% or so, or at least get risk off the table. But then, as you can see, the larger time frame here, if we do play out, you're sitting at 18.5. So overall, technicals are quite clean on this Swiss pair, especially in this most recent price action, which is just here. So that's quite nice to see, to be honest. And if this does fit your flag and Aussie Swiss is a position that you do trade, this isn't too bad. So we'll see how that one continues to shape up. Another Aussie pair, which is Aussie CAD. So jumping out to the weekly time frame again, not a whole lot of high time frame bias on this one. You can see, like most of the pairs that are on watch, we've had this impulsive leg to the downside and then push back up. So ultimately we could be forming these double tops to continue lower, or just stay in this larger overall high time frame corrective behavior throughout this period, which would still give relatively good opportunities within that corrective high time frame structure. You just have to drill more down on the intraday and play the shorter term. So daily wise, you can see what I do like about this, and something I spoke about on dollar ZAR at the intradays, is what I like is the double top, how we are approaching that second top here. So very corrective behavior towards the top here. Jumping to the 4-hour time frame, you can see that behavior even better. So for me, technically wise, it is shaping up quite nicely. And what I personally would be waiting for in order for me to take a position on this is, I don't know if we're going to be staying in this corrective behavior the entire way. So I think to forecast that is a bit too far-fetched for me in terms of, if we do get that, great. However, if we stay corrective throughout this entire period, what I'll be personally waiting for is a breakdown, hover, continuation. Otherwise, it's just too hard to, you might get tagged in, tagged out for this corrective behavior. Alternatively, if we start to form some form of price action like this, where we can get that third touch, that's where you guys are going to get your risk entry. Or if it's not that great, you can push down, wait for that hover and that 15-minute continuation just after that retrace that you get at the top here. So there's a few different ways that this one potentially could play out. I think it's how we are approaching the structure right now is great. We'll just have to see how this one actually reaches this area here. Alternatively, if you are still interested in that potential double top, once we break down, just be waiting for that flag and continuation from there. But overall, high time frames aren't looking too bad. Jumping down to the next one, which is Euro Pound. So if I jump out on the weekly time frame, Euro Pound personally hasn't made my watch list for quite some time, and I think jumping out into the weekly, you can see why. Not the greatest price action as of late. You can see it does trend quite well, so it was making the list and then ultimately just started to form these behaviors and hasn't made it for quite some time. But what we are getting now is some form of tops and bottoms, and at least a range we can play between here. So what I've got at the moment, a huge impulsive leg like most, and then a retrace here. So jumping down to the daily, what we can see is starting to form is maybe a larger correction like on most of these pairs, which will be giving nice daily structure. 4-hour time frame, you can see it a lot more clearly. And if I was to be going short on something like this, I would be looking for push down, push back up, and waiting for that third touch at this area here. For myself, there was a trade here for those interested who like the overall time frames from last week, so anyone who caught that was a nice position. But ultimately, I personally won't be looking at this, and I think the best plays would be coming from a little bit of patience. Like I said, waiting for this third touch here is going to offer some great opportunities there, and then you can still play this entire range, which is ultimately quite nice. We'll just have to see how this one shapes up though. This one is a little bit far away in my eyes, unless we just push up Monday, Tuesday, Wednesday, and then it could be on towards late week, but looking more like next week, knowing Euro Pound's behavior. But ultimately, we'll see how this shapes up. So 1 hour time frame, just so you can see that structure a little bit more clearly. Push up, waiting for that third touch. That's how I'll be personally looking at that one. Next one, WTI, which is US oil. So this obviously knows the US oil factor of this had a huge gap and bounce back already. So for those who personally trade that one, most likely won't be looking at it. I kind of use both, to be honest. So WTI is obviously the cleaner price action, so that's what I've really been focusing on as of late. We know these higher time frames, Mark's broken them down many times as they were on watch. We're waiting for this third touch and overall historic lows. So 1, 2, 3, and then all in this area here. So in terms of where we are at price, we know oil doesn't really fundamentally want to stay this low. we have entered this form of corrective behavior. But because of all the chaos that's been regarding oil as of late, I'm really not surprised. I expected some corrective behavior for the next few weeks or so, but what we ultimately could be getting once we break out of this, and this is really how I'll be playing it, is until we get out of this structure here or start to form something that we can identify as clear structure, because this is a little corrective at the moment. But if we push down, get that second bottom, I won't be taking that risk entry there. I believe I want to see a little bit more formation before I'm happy to get into that. And there's so much risk to reward to this position that if I wait for that next push, I'll take the next flag. That's okay. That fits my plan. But what I will be waiting for is that second touch, push back up, push down again. And if we get that third touch of a form of structure like this, we know that there is a huge amount of risk reward in this position here. I'm sure you guys mostly have sized it up. So if we were to get a risk entry from this first larger flag here, let's say 50 pips, even just to the top here, you're looking at close to 30%. And that really isn't even, breaking the tip of the iceberg on the oil train just yet. So this one's shaping up very, very good. It does just require a large amount of patience in my eyes. So that's personally how I'll be playing it. I'm just waiting for any kind of larger correction to shape up, something to signal to me that we have broken out of this kind of consolidated choppy phase and we are now forming structure, as structure to me is king. So that's personally how I'll be looking at it. Next one on the commodity list is wheat. This is a position that I took earlier. The recap is in read only, but for myself now, how I'll be looking at this is it needs a little bit more development again. So jumping out to the higher time frames, you can see where I'm most interested in this position is here, the double tops or double bottoms, or here. Until we get to these areas, I will be applying a little bit of patience, especially I want to see a bit more on the intradays. So jumping down to the 4-hour time frame, you can see ultimately we had this first correction, we pushed down, now we've just started to form this larger consolidation period just here. So at the moment, for myself, I'll be waiting to see if we can push up and get some form of 3-touch price action towards the top just here. That would signal to me that this could be making that final move to the downside. I'll be interested in that position for sure, but until we have again some clear structure here, I don't believe there's a great opportunity on this one just yet. It could still shape up, but I feel like a little patience here is going to be needed. We could push down, get this hover along this line here, and then to the breakdown. That will also be great, but again, we need to let the market show us its hand. It's already given us one good entry, so we just wait and see kind of what this corrective behavior turns into. And again, follow the structure, keep it nice and simple, forecast the 2 or 3 scenarios that fit your plan, and then move on from there. Next one is pound CAD. So jumping back again to the weekly time frame. Classic example of good structure forming and then entering periods of consolidation. You guys can see this most recent price action compared to this nice trending market here. So ultimately waiting to see some clear pictures before making a good analysis on the higher time frame. Just remaining neutral on this one. So jumping down to the daily again, you can just see that it is quite corrective, quite choppy, and I'll be waiting to see some more clearer signals before executing. However, if you are interested in this position, what we do have shaping up is some corrective behavior. We have 2 potential double bottoms that I can see. So 1 and then 2. So either one of those will be quite decent. For myself, not really looking to take any risk entries. If we do have a false breakout of that push up hover, that will personally be your first entry, as there is some still potential towards the upside. You can just play that short-term position just up to here. Ultimately, we stay in that corrective behavior, and then you can look for long opportunities from that second double bottom. But for myself, that's personally how I see pound CAD. Next one, Kiwi Swiss. Now, a few Swiss pairs on the list that are made for the requested pairs. So if I just zoom out all the way here on the weekly time frame, you can see again, historical lows broken back into this overall larger double bottom. And now we're just waiting to see if we're getting any formations here. So daily, you can see we're starting to get some consolidated price action. 4-hour time frame, you can see it's actually looking, these Swiss pairs, to be honest, are giving very, very good clean patterns. Like what I was saying before regarding Aussie Swiss. This is normal Swiss behavior. This is nice Swiss behavior. So I do like how these patterns are shaping up. And what I'll be waiting for myself is pushed down, waiting for a third touch here to continue. I like the higher time frames. I like that we bounce back from all-time lows, impulse straight back into that double bottom, and then I'll be waiting to take any long opportunities from these larger corrections, as I said before. So jumping down to the 1 hour, you can see here, just keeping it really nice and simple, push back down and then getting just nice corrective behavior, staying inside this relative price action and then taking that third touch here, or push up, hover, continuation will also be on the cards for myself. But overall, to be honest, these Swiss pairs could be quite the sleepers for this week. They could shape up very, very well. So great to have on the requested pair list, that is for sure. We'll see how they shape up. Next one, Kiwi CAD. Kiwi CAD personally hasn't made my watch list for quite some time. Zooming out to the higher time frames, on the weekly time frame, you can see here, really just waiting to see these patterns play out. You've had this first touch, second touch, waiting for the third touch potential at the top here as well, but we'll see how price actually reacts to that. You can see on the daily time frame, it's been a little choppy. All this price action since March 20th has been very, very choppy. So just waiting to see now we're in this nice little corrective ascending channel. If we can keep correcting towards the upside here, I do believe that there could be a potential short opportunity shaping up if we do manage to stay towards that area. Now jumping down to the 1 hour time frame, you can see we've already had that third touch here. So at the moment, we're still quite far away. So for myself, I'm not really looking for any positions just in this area just here. I'm more looking to play that longer, higher time frame to kind of adjust that, consolidated higher time frame basis. So if we start pushing up, we can still stay in this corrective pattern. And then once we break out of that, we can see if we can get any kind of risk entries from the top here, see what intraday patterns start to form. But ultimately, again, this one just needs a lot more patience in my eyes, and we'll see how we approach this area. So if we can get 1, 2, 3, I'll be definitely interested in taking a risk entry like that if we decide to move up to that way a little bit more impulsively. But ultimately, this one, like I said, needs a little bit more patience, and we'll see how this one shapes up. Last one on the requested pairs is Kiwi Yen. So jumping out to the higher time frames, you can see here, ultimately, like most pairs, had this big impulse and now pushing back into that structure here. So if you want to extend this third touch, false breakout, break back in. Jumping down to the daily time frame, you can see that here. So we've had this push down, impulse correction, big impulsive, now just staying in this larger correction here. 4 hour time frame, just really waiting to see larger development shape up. And I never kind of thought I would say this, but I kind of prefer Kiwi Swiss over Kiwi Yen at the moment. I just want to see how this price action shapes up. I believe the Swiss pair is actually cleaner at the minute. So again, very similar though, waiting for these larger kind of 4 hour larger corrections play out and just waiting for any longs from this third touch here. For myself, it's either that scenario or we break fully out impulsively and then start to form a larger, cleaner flag and be looking for risk entries from that area there. This does have a little bit of high time frame potential just because we need to bounce back into these patterns and we still have a lot of room to these overall larger double tops if we were to make those. But again, we'll need to see these larger patterns play out. And on the 1 hour time frame, you can see that it is quite choppy, quite consolidated, but you can still make out structure. So again, if we come up, push back down, give a good third touch here, that is still potential for a risk entry. But hopefully you guys have enjoyed the requested pairs of this section. Now Jake, Neil, and myself will be moving over to a Q&A. Thanks, guys.
Hey everyone, so I hope you enjoyed that slightly different take on the Sunday market breakdown and that you took a lot of value away from it. We're now going to go into more of a roundtable style Q&A. So thank you to everyone that sent in their questions. We're going to dive straight into it and then kind of throw the questions around between the three of us and get a few different opinions on it. So the first question that was sent in was, I came into Falcon with a similar style of trading. Now the way I enter is slightly different. I like both styles of trading, but is it okay to switch my style of trading between the two, even though I'm only supposed to stick to one strategy? Now, Benny, I'm going to throw this one over to you first, as you've, out of the three of us, most recently switched over from one style of trading to another. What's your take on this?
Yeah, it's a good question, and it's something that I feel like a lot of people do consider when switching over. However, I feel like there can be a lot of emotional side effects that are kind of unmentioned with this. So for myself, I mean, one thing that you have to obviously take into account is you don't want to get stuck between analyzing two different charts, two different scenarios, because ultimately trading is an emotional game with one style, with one strategy. When you bring the other two into it, you might see a position that you're currently interested in on one, and then it's actually saying a negative towards the other position, and that's with the other style. So for myself, I feel like it's really not able to blend the two as a hybrid. I really would go against that. I feel like, you know, you really need to kind of commit to one style or the other in this case, purely from an emotional perspective.
Yeah, 100% agree there. If you're holding on to the old style, it's definitely going to hold you back from obviously progressing, because as you said there, Benny, people think, okay, well, this style works and this style works. If I combine both, I'm going to get a hybrid of the best of both. But you actually get the worst of both, because as you said, say it's you're using a pivot or an EMA, you're looking for a pullback to an EMA. But so we're looking at that as impulse flag. It doesn't quite get to the EMA, but it's like, okay, well, I'm doing a bit of a hybrid. I can't get in because it hasn't pivoted, but it's been a perfect flag. I'm not going to set the order, and then it rolls over and does 4%. So, and then the same thing is like, okay, well, it's hit the EMA, but it hasn't formed a nice flag, or it's quite steep. Do I take it? Do I not take it? And you're always second guessing yourself. And as you said there, Benny, when you do the forecasting, you're forecasting probably 20 different opportunities. And it's so hard to later in the day when you do take the trades to remember what you're thinking and obviously execute in that positive mindset. What are your thoughts, Neil?
Yeah, I think you both covered it really, really nicely there. And I think in order to succeed in this, you've got to have a lot of mental clarity. You've got to know completely what you're doing and not deviate from that plan. I know for myself, when I did start with a more support and resistance style of trading, but luckily for me, I wasn't trading that way for too long. But when I did come over, I definitely went down that avenue of sort of, oh, well, I can take the best of both, you know, and make my own hybrid, and then I'll be absolutely fine. And what I was finding was that, you know, the Falcon strategy, for example, was telling me a short, but I was using stock RSI and EMAs and thinking, well, this is looking like it's bottoming out, and I'll be trading directly into the EMA. So do I want to be taking this trade? Perhaps I'll just wait for more confirmation. And then lo and behold, the position goes on without me, banks a good 5-6%. And I've just been sitting there waiting for more confirmation, because these indicators are always lagging and they don't always give you the full picture. So for me, it was a tough learning curve in the beginning. And I thought that, like what you said there, Jake, as well, you try to get the best from both, but you end up taking the worst from both. And at the end, it just slows your progression down. So my opinion, my take on this is you just have to pick one, really, really stick with that, master it as best you can, and then just, you know, have faith that that strategy will work for you and just become like the best you can be with that strategy.
100%, because what happens is you're just paralyzed by analysis. There's so much going on that you just don't know how to act. And as you said there, by trying to do the hybrid, trying to do everything, you end up doing nothing, and it pulls you backwards. And you find the people that progress the quickest, they kind of pick one style and go all in. They burn all the bridges, jump all in, and that's how they progress the quickest.
Yeah, definitely. So the next question that we want to cover, Benny, I'm going to throw this one over to you as well, because you've talked about this on a recent podcast that you've done with Mark. But the question is, how do I get over the hurdles and setbacks that occur from 0 to 50,000 and then from 0 onto 100,000? It seems really hard, like you're doing something on a smaller account. So what's your take on this? I know you've talked about this before, so you've got a lot of value to give here.
Yeah, definitely. So I feel like, and like I said, we spoke about this, that 0 to 100K is by far the hardest in terms of emotion. I feel like it breaks through a lot of your financial thermostat, so to speak. So your limitations on what potential money you can earn is broken throughout that period, far greater than that 100 to 200 and then all the way up to 7 figures. So I feel like it's as long as you're expecting that and you know that this is the toughest period and it gets easier from there, thinking long term is ultimately going to give you the far greater results. And I understand that it can be slow, especially if you're trading on that lower end towards like 10,000 and less. Obviously, you need to be in that mindset of trading 7 figures before. Like, you need to think that you're consistent far quicker than you actually are consistent, if that makes sense. So that's what I've always preached, and that was something that I've implemented from an early stage. And you can go back to simple things like playing around on compound calculators. I think a lot of people think it might take long, but then when you put, 1 to 3 years worth of solid returns, even if that's on a £10,000 account. That compounds very, very quickly. Plus all the other opportunities obtaining a potential investor once you're somewhat 12 months plus down the track. I think thinking money longer term is something that everyone has to go through in the earlier stages. I think we all do that, but just knowing what kind of journey you're going to be in for and trying to raise your financial thermostat throughout that period in terms of thinking longer term is ultimately going to give you kind of the best preparation for that journey. Are you kind of similar to that, Jake?
Yeah, 100%. And I'll use an analogy where there's a road mapped out for you. If you stay the course, think long term, obviously scale up incrementally, you know you're going to get there in the end. But what a lot of people do, and I think there's a quote by Warren Buffett, I won't quote it because I'll butcher it, but everyone tries to take the shortcut. It's like, okay, well, this plan may take 5 years. I know after 5 years, I will definitely be there or be very close to being there. And everyone thinks, okay, well, 5 years, I can do it in 2. Be it ego, be it lack of patience, be it all the above. They try to make their own kind of path and they try to create a shortcut. And what happens is they get lost. They come off the beaten path and they kind of blow their account, or they do something silly which allows them to not scale. And if they just stayed the course, it would have been obviously so much easier for them. And that's kind of what we come down to. It's, as you can tell, like our analysis, our everything is very obviously structured. We're very methodical about what we do. The same thing with scaling. If you do it very incrementally, it becomes easier. But if you try and shortcut saying, okay, I'm at 1,000, but I'm going to jump to 100K to a mil. If you do it too quickly, you're shooting yourself in the foot, and that mental kind of burden of jumping up too quickly and having some losses on those accounts, that size, it's going to pull you back and hold you back well into the distance into the future. Because every time you get back to 100K, I've talked about it before. Say you go from 1,000 to 100K. Sorry, if you have a couple losses there, you're now down 300-400% of your old accounts, and say you come back down to 20,000. Next time you're at 100 grand, it's like, oh, last time I was at 100,000, I messed up severely. And then you have that negative emotion, and then you either force trades or FOMO. Again, just emotion creep in, and it just stops you from progressing. So Neil, what are your kind of thoughts?
I really like the points that both of you have covered there. And I think what it ties back to, especially in the earlier days, is that a lot of us are accustomed to having that sort of employee mindset where you put work in and you exchange your time and your effort for money. And in the early days of trading, you're putting in a lot of effort, a lot of work, a lot of hours, and financially you're not seeing any, reimbursement of that time. If anything, and what is very, very common for a lot of traders is I've put in hours and hours and hours of time, like effort, blood, sweat, and tears, and I'm actually, I've lost money. And it's a sort of tough mindset to adjust and get out of, because as in society and over like our formative years, we are just so accustomed to that sort of attitude and mentality. It is what is common. It's very, very unnatural to be told you've got to put in so many hours and weeks and months and years of blood, sweat, and tears and put the hard graft in, and you're not necessarily going to see any reward for your efforts in those first, that first period, those first year or two, but it's about having that sort of longer term mindset, which is a question we're going to come on to in a moment. But it's about having the bigger picture in mind, like what Benny was talking about with the compound calculator. The compound difference, the interest doesn't really make much. It doesn't really happen very quickly. It's not the first 3, 4, 5 years where you really see the difference. It's after that where it starts to kick in. And what Jake was talking about as well with like scaling up the accounts, it's, it seems slow at first and there's not that much difference done at first, but it's later down the line in that bigger picture where the big changes really do happen. So it may seem disheartening at first, but you really have to, if you are in this game for the right reasons, you have to be willing to sort of, be able to take your time. I mean, we've all used the analogy before about university, how people go to university for 3-4 years, very, very happy to spend that sort of time with no sort of reward for the time and effort that they're putting in, just to then start on the lowest rung of the employment ladder. It should be, it's a very similar case with Forex trading as well. It's, it's not a get rich quick scheme. It's going to take some time. You're going to have to put the work in with no reimbursement initially, but then, later down the line, that effort compounds, your knowledge compounds up, and then finally the money will start to come in and start to compound up as well. So, but if we look at it from a very, very short time horizon and short term sort of perspective, it almost seems like it's not worth it. But, the value really comes later down the line.
Yeah, 100% well said.
And that ties us into the next question, which we wanted to talk about as well, which is Hey, Mark, I hope you're doing okay and getting better. My question is how to focus more on the long term instead of the short term mindset in trading. So, Jake, how have you managed to sort of switch your mindset into more longer term? Because I know you were studying, what is it, medical science back at university in Australia, and it was a 5-year course, I believe.
Yeah, so I talked about this on a few of the meetups where I got into trading in 2010, knowing that, okay, well, I was naive at the time. I was 18. It's a case of, okay, in 5 years' time, when I finish my degree, I want to earn some quote unquote passive income so then it can fund me through my postgrad medical degree, which obviously you can't work and study at the same time because it's so full on. So straight from the get go, I guess I was lucky that I was thinking, okay, well, if this takes me 5 years, so be it, because I know that 5 years is such a short amount of time rather than being in a job for 50 years. So that was kind of my time horizon before I even started. But also in terms of long-term and short-term thinking, an actual step there is, and I know a lot of people kind of get overwhelmed with thinking, okay, well, how do I think long-term when like I don't quite fully grasp it? What can I focus on the short term? Still have that long-term thinking, but then chunk your goal down. Say, I know, Benny, we talked about obviously scaling up your account. Say your account, your goal is $1 million, and say, okay, well, in half the amount of time, I want to be at to 300 or 400 grand. You're chunking the goal down. So, okay, every month, every quarter, I know I can make sure I'm on the path and still like progressing and have like a kind of a point of reference to know I'm moving in the right direction. Benny, what are your kind of thoughts on long-term thinking and just kind of thinking long-term in general?
Yeah, I mean, it's something that I feel like I had a good grasp on when I originally came, and that was purely from the focus of I always wanted to do this in terms of being rich in time. I feel like, focusing on the money can make that longer term thinking very, very difficult. And I understand everyone's in different situations in terms of needing money now and feeling like they need to obtain wealth very, very quickly. But for some reason, I just had a bit more of a focus on having a lot of free time, knowing that I felt confident in my own analysis and kind of the work I was going to put in, that it didn't really matter how long the journey took to get consistent. I knew it was going to eventually be consistent, and then eventually that's going to turn into a far better life than if I just grinded it out at a corporate job for the next 15 to 20 years. So I came at it, I guess, a little bit of different approach than like the university analogy, but for me, that's what it was about. And as Jake said, chunking down your goals, picking like relative targets to that longer term goal. And that's even smaller things like quarterly goals, not really monthly, but setting quarterly goals. And once you see progression, that's when you'll ultimately stay on track with that goal. It's like, when someone goes to the gym, it's really hard at the start, but once you start obtaining results, getting muscle, losing fat, etc., it becomes much easier, and then you hold yourself accountable. So there's like a purpose to all these processes that we set in place that ultimately all meshes in to help you think longer term.
And one thing you said there, Benny, which I really, really liked was, chunking it down and like having them goals, like smaller, shorter term goals that you're looking to hit. And I think if you make them goals, and let's say quarterly goals that you're aiming to achieve, if you make them not about the money side of trading, if you end up turning it into, okay, I want to stick to my trading plan 85 to 90% of the time in this quarter, or I want to back test, these 5 pairs over a 2-year period in this quarter, and you really focus on the processes that are going to ultimately help you become a better trader in the longer term. You will find that by focusing on things other than the money, you speed up your progression as a trader, and the money will therefore come as a side effect even quicker. And that helps speed up the journey overall. It's when we get too caught up in focusing on the financial output of trading too early on, where we can kind of trip ourselves up a little bit and, ultimately slow down the entire journey for ourselves.
100%. And I think you nailed it there, Neil, where your time horizon in terms of thinking matches up with your priorities. So if you're thinking Lambos, short-term stuff, I want the watches, and like you want to get the money quickly. But if you're thinking, as Benny said, I want time with my family, I want to look after my family, be financially free, have time later in life, you're thinking, okay, if this takes me 10, 15 years and to be at a level to be financially free, I'm well ahead of someone working in a job for 50 years. And again, it's a bit of an abstract thought, but it's like you talk to any one of your grandparents or anyone that's retired, and the number one thing they say is, I wish I had more time, or more time with friends, family. They're not thinking, I wish I made more money. So it comes, and it's very hard when you're 18, 19, 20, obviously very early on in your life journey, to be thinking obviously when you're retired. But if you're getting to this for Lambos, it's not a bad thing, but just make sure your priorities kind of match up with what you're thinking in terms of longevity. Because if you want to be around, have free time, look after your family, and have kind of freedom to do what you choose, then you need to obviously have that priority set in place.
Yeah, really, really well said. I like that. And yeah, it is difficult for, for younger people in the community to start looking at this from a perspective of, well, how am I going to be thinking when I'm, 60, 70, 80 years old? But, if you do that and kind of reverse engineer that, what Jake's just been talking about, it can help you reprioritize what you're looking at and how you're approaching this sort of situation as well. So yeah, really, really well said there. Moving on to the penultimate question that we're going to cover now. Hi, Mark and coaches. I noticed that I'm getting caught up a lot in the 15-minute time frame and looking for patterns and entries. Because of that, I'm not thinking about the higher time frame structure and taking a lot of invalid trades that turn into losers. How do I solve this problem? So I think this ties in very nicely with what we've just been talking about, where you're too zoomed in on the chart, and it's very similar to a lot of people getting too zoomed in on the output, the financial output and short-term goals that they're looking to achieve with trading. What I found was when I really had to dive into the lower time frames, into the 15-minute as well, and really chop and change the trend lines around and drawing my structure this way and that way, I was forcing a position to be there that's not really there. Now, I get, people like to make a little bit of fun of me because I always use the same phrase that is sometimes it's got to smack you in the face, but often they are the best setups, the cleanest setups. And I'm sure Jake and Benny, you've had this for yourself as well, is when you look at a currency pair and immediately it jumps out as you and you're like, okay, euro dollar, that's going short, or dollar yen, I'm looking for that to go to the upside. You don't need to chop and change everything around and dive into it and really and ah over it. But as soon as you find that you're doing that, you're looking too hard, and if you have to look that hard for the setup, if you can't see it, chances are other traders out there can't see it either. So the more obvious a setup is, the more likely in a lot of circumstances it is to therefore play out. So I would decide early on when you're doing your analysis that you're only going to be looking down into the 15-minute chart once you have clearly identified a setup on the 4-hour or the 1-hour chart as well. So that's how I managed to sort of save myself from falling into this trap. Benny, how have you sort of managed to, not fall into that sort of pitfall of digging too deep into the charts onto the lower timeframes and, spending all day camped out on a 15-minute chart?
Mm-hmm. Yeah, this is actually ties in well. I actually just did a coaching call earlier regarding this, pretty much the exact same thing. And what we found, it came down to kind of a routine-based thing. So I asked the person, what is your routine for analyzing? And it started for him on the 1-hour time frame. So what we do is we change that to a higher time frame perspective, and what that does is just build that routine of going through that higher time frame down to eventually the 15-minute time frame. And if you start at the weekly or the daily, however you want to do it, I would say at the minimum at the daily, then daily, 4-hour, 1 hour, most of the time you've probably already wrote the trade off by then, because as we know, the 15-minute isn't for pure analysis, it's for more timing and confirmation. So it's pulling it back and starting from a higher time frame perspective, even if it's not needed, even if you know what the daily is, it just primes your subconscious and always to be thinking about that higher time frame. And you'll drill down to the hour and be like, well, really, we're not a high time frame value area. The 1 hour, the 4 hour isn't really giving great corrective price action or whatever you want to see at that time. And then you'll realize it doesn't actually fit your plan. Am I forcing this? Probably. Move on to the next pair. So that is something that I would recommend implementing at least for the next couple of weeks, and see how your emotions feel with that. See if that does help solve the 15-minute time frame. But what do you think there, Jake?
Yeah, I think you nailed it there. And the benefit of the daily uploads in April, you can see obviously how relaxed and how, as I said, structured we go about our day and our watch list. And that's what you need to obviously bring into your own trading, rather than being like, oh, this trade's going to go up without me. Forecast what you want to see. If it doesn't set up, then you walk away. It's fine. And for the use of the 15-minute chart, and I've spoken about this a lot, where I only use the 15-minute chart to refine or filter a 1-hour entry. So it's a case of, okay, well, we're out of structure. We're in a really good high probability area. I want to use the 15-minute chart because we're in that area. Okay, the 1-hour chart's either almost ready or is ready. Then I'm saying, okay, can I refine this on the 15-minute chart? If the 1-hour chart's not ready, or we're impulsive nature, or it's just not in a good area out of structure, I'm not even on the 15-minute chart. So just make sure you have a structured game plan to, okay, when do I drop down the 15-minute chart? And not only when, but where. So where in structure, what type of nature we have, and that'll refine so many losses, because they're the ones you get tagged in and out. You look back at the 1-hour chart and it's like, well, actually nothing happened. So just a bit of a mini lesson there. What about your thoughts, Neil?
Yeah, no, I think you guys absolutely nailed it with what you said there. And Jake, what you said towards the end there about, that sort of, it's that process as well. It's that you have that process of going through the timeframes, and then when you are going to move on to the 15-minute or not. It's kind of default, like, okay, there's nothing here, I don't even need to look on the 15-minute. I really, really like that. And it ties into the final question which we want to talk about, which is, something which I'm sure a lot of people have been finding a little bit more relevant these days, which is about their sort of daily routine. What is your daily routine as a trader? And Jake, you were just talking about that there, about how your process, your routine of going through the different time frames. Can you shed some light on your sort of daily routine? Obviously, as this quarantine has kicked in, it hasn't really impacted us full-time traders too much because we're effectively on lockdown most of the time anyway. But are there any things that you would always implement in the evening or in the morning of your day, just to sort of get that structure in place?
Yeah, 100%. So as you've spoken about a lot, the day starts the night before. So I'll do a rundown of all the pairs. Daily close for us is now 9 p.m. Normally it's 10 p.m. Run through the pairs I have on watch and okay, this is how they developed over the day. Do a kind of a mini breakdown, mini watch list for the next day. And then when I wake up at 6, normally I look at the charts, forecasting, go to the gym first thing. But at the moment I'm not training. So I'll spend probably half an hour on the charts with a bit of breakfast or a coffee, going through my watch list and say, okay, well, these 2 pairs, these 3 pairs, or this 1 pair is the only thing I'm looking at for today. Set my alerts, obviously do my forecasting in detail. I know exactly what I'm looking at, and then I walk away. Then I focus on other things because I know as a trader, if you're always on the charts, always have something up in the background, you're going to be looking at charts. The same thing with the last question with the 15-minute chart. It's interesting where a lot of people use the split screens where they have the daily, the 4-hour, the 1 hour, and the 15-minute chart. And I asked them, so they run into the same issue where it's like, okay, I'm looking at the 15-minute chart too often. But if you have it up on the screen, even though you're not going to use it, it takes a millisecond to just glance right and look, okay, that's the 15-minute chart. So the best case for that, if you are that person, just remove that 15-minute chart from the split and just have either the 1 hour, the 4 hour, and the daily. You definitely don't need the 15-minute chart. So, but with routine, yeah, as I've spoken about last week, I set my alerts and walk away. I know exactly what I'm looking at. And if those alerts don't go off, then I don't need to be looking at the charts. Benny, what about yourself?
Yeah, obviously very similar in routine, quite different time zone though. For me in Australia, I'm the same. So wake up and the daily open is actually at 7 a.m. my time. So what I'll do is I'll just literally make a full daily watch list. I'll sit there, forecast for an hour, depending on the market conditions. Obviously, sometimes more, sometimes a little bit less, but it's like kind of an uninterrupted zoned in focus session. What that does is build my daily watch list. And even that said, going through what I just talked about, the 15-minute thing, starting from the daily, 4 hour, 1 hour, going through, filtering out everything that I'm currently watching that day, move that into an actual daily watch list separate to everything else that I'm looking at. Again, that just primes me to not go searching for other things that may not be there. I've already done that. I've already decided which ones are going to be fitting my plan best. And then from there, I'll step away from the charts. Obviously, post quarantine, I'll be going back to the gym in that time and just enjoying that ultimately free time is what we are talking about before as well. So these questions fit in really well together. And that's what Jake was saying. You don't want to be sitting there burning out, getting caught up into all these positions that you weren't actually really looking at in the first place. So I'll step away for majority of the day, come back pre-London, again, double check that daily watch list, make sure nothing else is crazy developed. And then just going through the night, monitoring those positions, setting those alerts, checking them every couple of hours if I have to, not sitting on the charts. I like to do everything with intent, not for a long term of time. So quality over quantity for me.
Yeah, really, really well said. And a lot of what I'm going to say now is just going to basically reiterate what you guys have mentioned there. But for anyone listening to this, I really, really want you to hear that the commonality between what we're saying here. And we know that this is very similar for Mark himself as well. So, we don't spend all day staring at the screen. Even though we have the available time to do so, we get our goals and our forecasting done the night before. We check it the next day. We know what is on our watch list. We set our alerts and then we walk away. I know for myself and Jake, and I'm sure you've said the same yourself before as well. If I wasn't a coach here at Falcon, I wouldn't have enough to do in the markets to fill my day. I would have to find something else to be involved with, a job or volunteer somewhere or a little side project, because I wouldn't have enough going on through my day to fill my time. As much as I enjoy training in the gym or going running, that you can't do that for 5-6 hours every single day. So a lot of repeated messages of what we're saying about right now is less is more. It's that quality over the quantity of the time that you spend on the charts. You know exactly what you're looking for, and then that's it. You have your alert set and you walk away. And if you don't ever receive an alert on your phone or on your computer, you don't need to be checking the charts every half an hour, every hour, even every 15 minutes, looking for something to happen. If you start staring at every pip tick up and down, you're going to start seeing things that aren't really there, and you're going to start jumping into positions too quickly or too late, and then start to micromanage positions that are running as well. It's a negative and it's a bad habit that I fell into myself when I first went full time. I went from being process driven, which had brought me from being a brand new beginner trader up to consistently profitable. And then I went full time, and for some reason I thought, now that I'm a full-time trader, I need to completely readjust and rejig my entire daily sort of routine. And it took me about 3 months to sort of get back on track. And it took me a lot longer than what I'm willing to sort of publicly accept, that, I didn't need to do all this. I should have just stuck with what was working in the first place. So if you are one of those people that has found that before lockdown, before this quarantine, you had a solid routine that was working for you, and, you had to sort of prioritize your time that you spent on the charts because you had to fit it in around your job, around your 9 to 5. Don't start trying to reinvent the wheel here whilst you are on lockdown. Stick to what has been working for you. Often, it doesn't need to be complicated to be effective. Less is more in these cases as well. So, in the evenings, I write my goals. I set them out for the next day coming. I've done my forecasting. In the morning, I wake up. I run through my forecast again. I know what's on watch. I have my alert set. I walk away, and then I can focus on ticking off one by one the other goals that I've set myself for that day. But it's surprising the little amount of time I spend on the charts as a full-time trader. Nice. So I think that rounds off the sort of roundtable Q&A that we have here, guys. We hope you've really enjoyed this. We hope you've enjoyed this slightly different style of Sunday market breakdown. I'm sure Mark will be back to full health before too long. But from myself, thank you very much. We will speak to you very soon.
See you guys in Slack.
Thanks, guys.